Finding that winning trade. Welcome to the live show, ladies and gentlemen, fellow traders. It's good to have you back. For the first time, I actually started a live show with 0 viewers. I see there are lots now. What a start. Guys, don't forget, trading's risky. Most traders lose money. If you don't like losing money, don't trade. Let's have a look at what we got today. Let's see where we're on and what's happening. Everything's changing. Hi, Coral. Good to see you. Lovely. It's the A team. We're back. And we're going to have a nice chat today and a little bit of fun as usual. And a lot of questions have arisen as to how to find a winning trade, how to find a trade. And we're going to talk a little bit about that today. But the whole point is you're not really finding a winning trade. You're just finding a trade. Let's just have a look here. Positions, how we're looking. This Australian dollar, US dollar, paid off quite well. It is coming back now. And we are still in the trade. What I did, I moved the stop loss up to sort of $100 in profit and left it there. And we'll see what happens. I'm hoping that it'll carry on going up at the end of the day, but it does look like it wants to come back again. We'll have a look and we shall see. But yeah, Brent crude oil has gone in our favor again, but it has also started to come back a little bit and retract. And of course, United States dollar, South African rand seems to be back on track and moving in the right direction. But what I did do this morning is I saw this trend resistance moved. It was down here where it had broken structure, and now the structure's changed, and now we're kind of in a bearish trend here. I'm hoping it'll break through that and move to the upside because we're already in the trade, so you can't do much about that. The Nikkei is doing well. It's not on this platform, but it is doing well. It's broken to the downside, so it's going side. Euro Great British Pound is also doing well on the other accounts, doing okay. So that's doing well. Yeah, then US 500, let's see. Morning FX trader. Hi, David and Elaine. Good to see you, Elaine. Lovely to see you back again. Glad you guys are here. And here we go. There, the US 500 is kind of moving down. These trends here that I've put in, this trend lines, are from a day chart. So keep that in mind. This is a daily level, not a 4-hour level. So you can add a 4-hour level in if you want to. I just put that in as a sort of guideline. And then there's a big support at the bottom here as a guideline. But on the 4-hour guideline, there's that green and that red line on the S&P 500, where it's just kind of sitting in that range at the moment and lying around there. Yeah. And the big question that I'm going to look at today is finding your winning trades, how to find those trades, how to look for those trades. How do you dig through the market and find something to trade? It's quite interesting. Some people will choose a trade and it'll be that one trade, that'll be it for the day, or some people will choose a rather large portion or a rather large group of trades. Others will have a giant watch list. Some will have a small watch list. So there's a lot of, differences around that and preferences. And it also depends heavily if you're a 5-minute trader or a 4-hour trader or a weekly trader. It makes a big difference to how big your watch list needs to be. And also how you pick your trades and the length of time you pick your trades for, obviously. Entry Swiss 20 short this morning. Carl, I haven't looked at the Swiss. I really haven't. I don't know if I've got it on my watch list here. I might not have it on this watch list. So difficult to tell you right off the bat. Perhaps I'll have to open something else up here to see if I can find the Swiss 20. So let me do that quickly. You guys won't be able to see this because it doesn't come up on your side, but I'm going to just open up my MetaTrader 5. If it opens up here quickly, and I'm just going to have a look for the Swiss 20. I'm just going to have a look at it for Carl quickly, if you guys are okay with that. but you guys will not be able to see that chart offhand. Hi Henny, good to see you. Lovely to have you on board. See, we've got quite a few people here, and so I just want to look for. Let's have a look here. Sorry guys, I'm just looking for something here for you, and I will see it in a moment. I never actually look at the Swiss 20, to be perfectly fair, so I've got to add it in here. CH20, this is my cash account that I'm playing with here, so I just want to and now it wants me to just later, okay, just wait. Now it wants to do an update. I'll tell you what, sometimes I wonder. Okay, right, let's just see if she came up. That's strange, I'm not getting it here either. That's a bit of an odd one. Why am I not getting it? Why is it giving me a hard time? Should have it on my list. Maybe that's why I never look at it. Let me see here. Where are you? Yeah, that's odd. I don't even have it on my cash account. Okay. Sorry, dude. I don't have it, Coral. That's weird. I don't trade it, but I also don't have it on my cash account, which is very, very, very odd. I think if I remember correctly, it's CH20, but let me just see. I'm not finding it anywhere. Just see if there's anything. That's Forex. Nope. Sorry, guys. I'm not going to go there. Okay, and I'm just going to close my account here and just go back to the old normal stuff. Sorry, man, can't look at it. You can send me an email with the whole thing on. I'll have a look at it for you. I'll have to have a look at it on another charting system or something to that effect. I don't know why it's not on my list on my cash account. That's probably why I never look at it in the first place. Okay. I wonder why I don't have it. Maybe it's because I'm in South Africa. I don't know. It's weird. All the others are. Everything else. It's on there. You should see the list. Ah, well, okay. German DAX. I think I'll call that today as a short or a long, but mainly as a short, because it's breaking through this level, and I was expecting a big red candle to the downside, and it looks like it gave an undecided candle there. Look at the big undecided candle, and now it's producing a green candle. So we don't have a trade at the moment. We don't have a short trade at the moment. Neither do we have a long trade. So as I said, if it breaks to the upside and you get the green candle going up, then we've got a long trade here. If we get the red candle going down, then it will produce a short trade, but nothing's happening at the moment, so we'll just hold back on that one and we won't do anything just yet. And the S&P 500, as I said earlier, is producing, it's gone short, but there's also a bit of a green bubble there. There's probably a lot of undecided people out there at the moment just waiting for something to happen on that. Ethereum on the crypto is looking rather interesting, as I say, because Ethereum, what it's done, let me just find Bitcoin on here. See, Bitcoin has broken through that support level. Now that support level was really strong, and it's gone below. It went down to the 108, 109, which is quite serious. And now it's trying to come back up and retest, and it looks like it wants to go down. So that is looking very, very, very bearish. I don't know if you guys agree with me, but that looks insanely bearish, because that was a really strong support level, and it broke through it, and it's coming back to retest it. So we've got to be careful on the crypto front here because it had a good run. It got excited. It ran through it, broke up, and it looked like it was going to go to the moon. And it's just fallen down, tried to go back up and fallen through. Now it's breaking through there. So always follow Bitcoin first. And then I look at the ETH, which was going so well, and I thought it would actually go up to 5,000, but I'm not a crypto expert, as you guys know. But it hit the resistance, hit the resistance, hit the resistance. The one thing I can do is read a chart. Doesn't matter if I know crypto or not. And the one thing I see is it's hit that resistance a couple of times and broken to the downside. But with Bitcoin falling hard, I expect that Ethereum will probably fall down to this 4,000 level again. And then we can have another look at where everything's going, because there's a very good chance that this could go all the way down, back down to this 3.3. So let's just keep an eye on the crypto and see what it does. Very interesting, though. Very interesting, I must say. And as I said, we did look at a trade on the Japanese Nikkei, on the Nikkei, and the head and shoulders. Now, for those of you who don't know what a head and shoulders is that pattern there. There's the shoulder, there's the head, and there's the other shoulder. They're broken to the downside. Now, if you see a head and shoulders, my favorite pattern in the market, there's, you get all these cup and handles and all these different types of things, flag patterns, pennants, and all the rest of it, and they're all good patterns. But my favorite pattern in the market is always the head and shoulders. There was a stage in the market years ago where every chart that I opened, and this was shares as well, it was just head and shoulders everywhere, and I started to not believe it. I started to think this is just a rubbish signal. But let me tell you, every single one of them played out. So I really do like this pattern when I see it. So when I see a head and shoulders, I look at it, and there's the shoulder, there's the head, there's the right shoulder. When it breaks below the shoulder, then you can normally measure the distance from the head to the bottom and take that distance and project it down. That's probably where it's going to land up, which is somewhere down here, the 41.3. So this is the Nikkei. You can expect, according to that head and shoulders, that it gets down to here. When is a head and shoulders negated? When it breaks through, you see I put the green line there. When it breaks above the right shoulder, then the pattern is negated and it doesn't mean anything anymore. So that's a head and shoulders pattern. That's what it's all about. Okay, so we're going to talk about how you find your trades. Now, finding a trade is not the most difficult thing in the world. Now, what I do is I have a general default watch list. I have obviously my favorites and my own watch list, which is a smaller number of trades that I'm trading at the moment. What you've got to be careful of is getting married to specific trades like I do. And for example, one of my favorite trades has always been the DAX, the S&P 500. There's a number of trades that I just love to trade. Gold, Brent crude oil, to name but a few. But as you go along, you can add to that, and there's a few of those that will fall away because they become stagnated or they're not doing much at a certain point in time. So you switch it around to something else. But what I like to do is I like to keep an eye on a number of trades. So more than these 8 that you see here, maybe, about 20 or so. And that gives me more to look at. But I will go through a default watch list and just look for trades that are applicable to me. Now, because I trade on the 4-hour, I can actually go through all of these and just pick a trade that might work for me, take those trades and just leave them on the market. So it's easier for me to pick a trade because I can, literally because I'm on the higher time frame. And even, if you go to the weekly and the daily, even easier, because you've got lots of time to look at the trades. So you can literally, if there's nothing on the front page, you can take a chart and say, well, you know what? There's really nothing on the front page at the moment. Let me go and see what else there is. And then you can literally just take a chart, open it up, and just go through all of these charts and just find one that looks, just by looking at the chart, if it looks like something that's going to work for you. And obviously the way to pick the trade is just to use the support and resistance. And what I'll do is, instead of the best way to do the research is to take it to the day chart, do the research there, come back to the 4-hour chart, do it there. But what I will do is I'll just do quick levels on the 4-hour chart, and if they look good, Then I'll go up to the day and just see if it's really going to work out before choosing any specific trade. But keep in mind, if you're trading on 5-minute charts, if you're trading on lower time frames, then it becomes a different picture. What you have to do is kind of pick 1 or 2 trades, maybe 3 every single day, rather than trying to pick all of them. Because on a 5-minute chart, you are going to get a lot of movements. You are going to get a lot of things going up and down on a regular basis. So when you're picking on lower time frames, just pick 1 or 2 that look good to you. But what I would normally do on the lower time frames is I'll pick the direction of bias from my day or 4-hour charts. Is it bullish? Is it bearish? And if it's bullish and I trade on the 5-minute, on that particular day, I will only trade that product bullish on the 5-minute chart. I will not trade it in any bearish method or manner whatsoever if it's bullish on the higher time frame. And that's kind of how I will find and pick my trades on any given day. But on the 4-hour charts, what I do is I'll just go through all the charts, look for patterns that look realistic to me. It looks like that could be a good trade, and then I'll go through that and I'll pick my trades that way. So in other words, I'll trade orange peels if they're tradable. I'll take any trade that looks decent. Can you explain why the market had a massive move on Friday at 3 p.m. if you know? On Friday, there was a Fed, I think that there was a Fed meeting. And like I said, I don't play much into daily fundamentals. I play into the big fundamentals. For example, geopolitics, companies going bankrupt, banks moving money or going bankrupt, whatever, countries having issues, that type of thing. Those are the fundamentals that I play into. Serious fundamental news. For example, I will look at, let me just put this on the news for you so you guys can also see what's going on. And so I'll look at the serious fundamentals. Trump to Fed Governor Cook, there is a sufficient cause to remove you. You know, that might be something you want to look at. US has much bigger leverage over China on Magnus. A whole bunch of things here that you can read into. And you can look at the news, and that makes a difference in the news. Now, what happened on Friday was smaller news. It's basic economy, where the Fed or the government of the US is talking about dropping the interest rates next month. And it all centered around an interest rate reduction in the next month or whatever. And everybody gets excited, and all the investors get excited because they look forward when they're trading. They don't look at today. So they're looking at, their market's going to do well because the interest rates are going down. So the Fed meeting and the things that they said moved the markets around that way. And what you get is a lot of knee-jerk reaction when that happens. So when you're looking at news events, that's why a lot of funded markets will tell you you're not allowed to trade during a news event, for example. They'll tell you do not trade during this news event because it's going to affect the markets. And sometimes they'll lock you out of trading. Because news events, what they do is they cause an effect, which is, I don't really see much of it here on the S&P 500. Not so bad this time around, although that is a big green there. There's a big candle there. Okay, so what you get is an effect where markets push, right? And what I always see is during the time that they're actually talking, during the time that these guys are having their little debates and chats and what have you, this candle will move all the way down, and then it'll move all the way up, and then it'll move all the way down again. And then sometimes you get this effect where it just goes straight up, which is probably because of the interest rate chats and things like that. But after the event, you kind of get this relaxation. It's like the elastic band is relaxing again. It's just sort of coming back down, falling off, which is why I don't normally play into daily fundamentals anymore, because they just mess your head around. It normally relaxes back to where it was, and then it'll continue on in that direction. What you can do with daily fundamentals, though, is say, well, the news was good, or the news was bad. So in general, overall, the bigger picture is, okay? And then you can look at the bigger picture, read into it, and say, well, yeah, there's a good possibility that this is still going to go along, because there's no real bad news here. This is more good news than bad news. So I think the overall picture will push us to the north. You know what? you can look at your daily fundamentals along those lines. But basically, Coral, that's what happened on Friday. If it was Friday, or was it Friday? Or I think it was Friday or Thursday. I think it was Friday, where you get these daily things that happen, people standing up talking. Usually when the Fed is talking in the US, you have to be very cautious because they say things that you don't expect, and it spikes things up and down. So where the problem comes in with those kinds of speeches and those kinds of chats is stop loss. If you've got your stop loss in place, and it even seems like it's in a really good faraway area, it can be detrimental to your trade if it's just a spike. And I can't see one here. Oh, spike. You see that spike there, up and down, and then it still lands up in the middle. That sort of candle. If you've got your stop loss there, it's going to take it out, and then you're going to be out of the trade, and it's going to go and settle back where it started. And that can be really irritating, which is what these news events do to you. So what you can do when there's a news event on, and it's just going to be a whole lot of hearsay, you can move your stop loss further out the way if you want to, just to stay in the clear, stay clear away from it, or if you can, turn it off or whatever, and just wait for all the dust to settle. What I used to sometimes do when I was heavily in the market, heavily overtraded in the market, what I mean is if I've got too much money in the market, what I would do before a news event like that in the old days, I don't do it anymore because I don't play into it anymore, but when I used to play into it, I used to hang my hat on the fundamentals. What I would do is just before the news, I would actually literally trade out of everything and then wait until after the news and then trade back into it when it had all settled down, maybe the next day even. Let it all settle down, because at that point it becomes extremely difficult to control. And the thing is, no matter what you think the news is going to be, what you believe that news is going to be, how you feel it's going to play out, it never quite plays out the way you think it's going to, or the way they said it's going to. A good example of that is when everybody said the Australian dollar is going to go to the ground on Friday, and guess what, or Thursday, and guess what, it went the other way and it went up. Powell's speech, it's exactly what I said, Blue Mango, was Powell. So, whoever was talking, I think generally everyone talks, and that's the Fed having their little speech and saying we're going to do this and we're going to do that, and everybody reads into it, and then the markets go quite pear-shaped. So, you got to be careful of playing into that, because like I say, when I used to play into the fundamentals really strongly, when the daily fundamentals, that is, jobs figures, CPI, and that sort of thing, I would sit and wait for the jobs figures, and I'd have my whole plan. If the jobs figures are this much higher, then I'm buying that, and if they're much lower, then I'm selling that, and then they would come out higher, and I would buy that, and it would go the other way, and I'd think, well, what happened there? And you'd be confused, and then you'd sell out, and then it would go the other way anyway. So, be very careful of getting caught up in that entanglement. You've got to remember that we as retail traders, we play on the coattails of the big money. The big money makes up the majority of the market, the big majority of the market. Not even, we make up such a small percentage. And they are moving the markets, and they have an idea of what's happening far quicker and more than what you will ever know. So, your best bet is just to carry on doing what you're doing, and just carry on riding on their coattails as far as you possibly can. That's the best way to trade it. Probably the only way to trade it. I see gold is finding its way back up as well, which is always interesting. Hey, where's Shane today? Shane, we need you here so you can look at all the AdWords for us. Where are you, dude? We've lost Shane, we've lost Kevin. Hoping my shows aren't becoming too boring for you guys. But yeah, gold is moving up nicely, heading up towards that resistance, and that's like one of those 4-hour resistances that I was talking about now. So you see, when I pick a trade, the first thing I'm going to draw in is these 4-hour levels for myself and say, oh, that looks like a range, whatever. Then I'm going to go to the day, and these are daily levels, those big rectangles up there. Those are your daily levels up there. I'll put the daily levels in as well, and it just gives me a picture of where everything is. That level I don't need anymore, that can go. And that's a 4-hour level, that trends. Normally I put the trends in on a 4-hour level on the level I'm trading on. But there are times when I'll go to the daily and put them in there. For example, on the S&P 500, I've done that, gone to the daily and put a daily level in, just to give me more clear direction as to what's going on there. Annie says Shane is in a meeting for now. Thanks, Annie. Thanks for letting me know. Thanks. I'm glad it's not that boring. That's good. Always good to hear. Yeah, I don't want to bore anybody. Let's be fair. I've got to keep you guys enjoying yourself at least, and learning something from someone. But yeah, it's one thing that always makes you think if you're doing something like this, and I'm trying to put information out, you think to yourself like, am I boring or not? Yeah, no, it's a thought. But it's something we do, we just do it. I saw a video from some successful trader who said when your intuition tells you to do something, do exactly the opposite. Yeah, well, that depends how good your intuition is. You see, the whole point of trading what he's doing is he's actually admitting that the market's 50-50. He's actually admitting to it, because most people won't. And I'm glad that he's admitted to that, because what he's saying is the market's 50-50. It really doesn't matter which way I go. All I've got to do is manage my trade. That's what he's saying. That's exactly what he's saying. I mean, if you choose your trade because you toss a coin, then it's the same thing. If you choose your trade because I think it's going to go up, so you know what, I'm going to go short. All you're doing is trading on the 50-50, but you've just laid a plan out that says, when I want to go long, I'm going to go short. That's all you've done. Now what's your next step? Your next step is simple. Your next step is to use your strategy, manage the trade, and try and make a profit out of it. It's not a win rate you're looking for. Win rate, oh, it's great to have a win rate. It's great to win every trade. I mean, I wish we could win every single trade. That would be insane. But we can't, so we accept that. And when somebody says, when your intuition tells you to go long, go short, then he's admitting that the market is 50-50, and all you need to do is take a trade either way and then manage it and try and make sure that you take a profit out of it, or strategize it so that you can become profitable with that trade. That's actually a very good point there, FX trader. You know, you bring that up, and so many of these guys will tell you that it's, you know, that it's not 50-50, and you got to have a win rate, and you got to do this and use the charts. You know, charts don't predict the future, and neither can you. So it's just so out there, but people don't see it. They don't pick up on it. Thanks, Blue Mango. I appreciate your fine comment that underestimate how much sharing your knowledge means. Thank you. I do underestimate it. I don't realize how important it is. Love your videos, never boring and really useful insights. Thank you, Chris. That's great. And then FX traders, you're right, I forgot. You see, that's the point. The real point is, you know, that's what it's about. That's exactly what it's about. Is it doesn't matter which way you take the trade. What matters is how you manage the trade. That's where you're gonna be profitable or losing at the end of the day. You know, Minnie asked me, are you using a price action strategy? Yes, Minnie, I'm using a price action strategy, and I don't have indicators on my chart, and it's a price action strategy. Yes, totally, that's what we're using. Okay, and at the end of the day, we choose price action because we don't want a mishmash and a mess all over our charts. But what you have to understand, Minnie, once you've watched me for a while, is I'm not here to prove to you how many wins I can make or how great I am as a trader or anything like that. I'm here to show you the mistakes that I've made, and I'm here to show you how to stay in the game and how to be a trader. Now, what you have to understand about that as well is that the charts are not the thing that predict the future. The charts don't make you money. The charts give you the ability to take a high probability trade and manage your trade, manage your risk. And then you move on to our strategy, which is in almost every single one of my videos. I try to put it in all the videos where I can without, boring everybody and saying it over and over again, but it's necessary because most people do not get the fact that it's not about charts and win rates, that it's actually about a business plan and a strategy. That's the only way that you're going to be successful at the end of the day. That's the only way you're going to make some money at the end of the day. You're not going to make money with a win rate. You're not going to make money with a chart. The chart will give you the ability to work your trade, to manage your trade, to manipulate your trade, to do whatever with your trade, to see what happened in the past, which in all likelihood might happen again in the future because humans are creatures of habit. But what's going to happen in the future, we don't know. Nobody knows what's going to happen in the future because charts are not little crystal balls with little fortune tellers sitting behind them telling you, if you put this card here, this is what's going to happen next. That's not how it works. And this is where it's very difficult to get this message across to people, to understand that we're not talking about predicting the future here with charts. What we're talking about is taking a trade and then managing it and manipulating it in a way that you're going to try and be profitable somewhere down the line. As I've said before, I've got, how many trades are on this page? 1, 2, 3, 4, 5, 6, 7, 8, right? If there were no trades open here right now, we could literally go, look at this one, take a choice, long or short, 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 do 8 trades. You can take all 8 trades, long or short, without any indicators, without anything. And then just manage those 8 trades. And do you know what? At the end of the day, you'll probably achieve the same result as all the work that we put into it. So, as I said at the start of this video, how do you choose your trades? How do we choose our trades? How do we pick our trades? Okay. And we go into detail about how we pick our trades, particularly if you're a 5-minute trader or you're a 4-hour trader, and the different ways that we pick our trades, and the swing trading way of picking trades, or the day trader way of picking trades, whatever the case. The research that you put into picking your trades and deciding what you're going to trade. And you put all this work in, and it makes you feel better because you now know that you've put all this work in, and you now believe that this is what's going to happen with this particular product. I mean, for example, why am I long on the United States dollar, South African rand? Because I fundamentally believe that it's going to go long, because I believe that the South African economy is weak and this should go long, and so on and so on and so on. And I've got all the reasons under the sun for why I would be long on that particular trade, even though it's a little bit in the red. That, I've got reasons for it. Brent crude oil, I've got my reasons as to my research and why I'm long. But I could take all of these trades without any research whatsoever, not anything. I could just say long or short, boom, in, go, and then manage it with a strategy, and I'll achieve the same result. And that's the insane thing about it. That's why I say, forget about thinking that charts are going to predict anything. They're not going to predict anything for you. All they're going to do is give you the ability to manage your trade, manage your risk, and take a high probability trade. When he asks, is trading profitable? This question runs on my mind every day. And I'm going to answer that question for you now. Nick says, after taxes, commissions, slippage, consideration, inflation, odds of making decent money is nil for most people. Thanks, Nick. You answered the question, but I will answer it. Don't worry. How's it, Luigi? Good to see you. I'm just loving Nick's. Nick, that's the best answer I've seen all year. But yeah, is trading really profitable? Now, the one thing you have to understand, Minnie, when you ask me, is trading profitable? the one thing you have to understand is there'll be a bunch of people out there boasting about how much money they make and all the rest of it. And there'll be people like myself that will tell you this is not that easy and it's quite difficult. Somewhere in between that. But it is not an easy game. And you have to understand that if 70% of position traders, swing traders lose money, then clearly it's not that simple. And only 30% of people are making a profit on swing trading. On day trading, that figure becomes 99% of day traders lose. So only 1% actually make money. So now you've got to decide for yourself, bearing in mind that you're going to be a retail trader, not a institutional trader. Well, I don't know. Maybe you are an institutional trader and you've got loads of money. I don't know. But obviously, I'm playing on to the fact that you're probably not, and you're probably a retail trader. So retail traders make up less than 5% of the market. So that leaves you with a very, very, very big quandary, because now you know that more than 95% of the market is made up of institutional money, and they've got all the information and you've got no information whatsoever. So what you've now got to learn to do is ride on the coattails of the big money. And not everybody can make that profit. Not everybody can do this. So the only way to do this, the only way to be perhaps profitable in the market and to stand a chance, because you have to understand one thing, Minnie, and this is what I go over and over and over again in my videos. You need to watch my videos where I tell you over and over again, this is 50-50, these charts. And your win and your ability to win in the market comes from your mind, your psychology. You have to overcome fear. And that fear is also very dependent, because there's a big difference between the fear of trading with your last amount of money on earth and having loads of money at your disposal and only trading with a portion of it. The fear factor is completely different. It's a different scenario when you are trading. So, and everybody also has a different threshold to fear and how they approach it. Patience is another big issue that human beings have to overcome. How patient are you? Are you patient enough to do this the right way? Do you wait for the trades to come to you, or are you chasing the trades? So there's a lot of things you need to overcome to become profitable in the market. The big thing is to have the business plan and the strategy in place to make a profit. I'm not saying that my strategy is the only strategy. I'm not saying it's the best strategy. I'm saying it's a strategy that will work, that does the trick, and it keeps me in the game. So it's a strategy I talk about in every single video, and it's the one thing that will make you profitable even if you don't have a system, even if you don't trade on price action, even if you don't trade on squiggly lines, even if you just say, I want to buy, I want to sell. The strategy will have a means to an end for you. For you to lose on that strategy, which you can because it's a 50-50, for you to lose on that strategy, you have to be gargantuanly kind of unlucky. So if you're unlucky, perhaps you shouldn't be trading. I mean, you'd have to lose probably 20 trades in a row, and it just have to really go seriously bad for you for that strategy not to work out somewhere down the line, or to keep you in the game at least. You see, the first target you've got to have when you're in the market is to stay in the game. Protect your capital and stay in the game. The next target will be, okay, now I'm staying in the game, I'm protecting my capital, but now I want to make some profit. I want some money in my pocket. And then you want to do that as well. Now you have to understand that not every trade is going to make you a decent profit. In fact, not every trade is going to make you a profit. Through the course of a 12-month period, because I work over 12-month periods, I have one or two trades that make me a huge sum of money. Okay, it might be the VIX, it might be Brent, it might be one or other trade which just pays me. It just pays me off. And then I have a few trades that give me really nice profits. For example, last Saturday or the week before, 8 Ethereum gave me $3,000 or $4,000, just one shot. That's a small win, okay? That's a medium sort of win. And when I talk about big wins, I'm talking about $30,000, $40,000, $50,000 wins. That's one big trade, okay? A couple of those a year will do you good in the market. Those happen on my cash account usually. Those type of trades, usually I don't have them here because I don't even look at these things that as often with you guys, because this is for you guys. These charts are for you guys. Now, there'll be a couple of trades now, like this Australian dollar, United States dollar is on my cash account as well. So I've taken that trade and I'm leaving it to run and it's doing really well. And it's a few $1,000s in profit, okay? So that's a medium sort of win if it plays out, according to my way. But if I look at that trade at the moment where it's standing on here, so that one will also have my stop loss moved up to about $1,000. So worst case scenario is I win $1,000 on that one. So there'll be a few trades like that through the year as well. But there will be a huge amount, more than 50% to be fair, of trades that will lose me a few $100s here and there, okay? But small losses all the way through. So there'll be a lot of small losses. There'll be a lot. But the wins are big, and there'll be one or two of those wins which are gargantuan, and that's what pulls me through the year on trading, and that's why I still trade, because I have my investment accounts, and my investment accounts are really, really good, because if you invest in the market and you set and forget, those always, always, always make you money, always. Okay, so you don't have to worry about those. Where the losses come in is in leverage trading. So if you look at trading from a patient and perspective and that kind of perspective, trading is good for you. Trading can make you money. But if you're trying to look at it on a short-term, let me quickly turn this $1,000 into $2,000, you have to ask yourself this question, and that is, where can I take my money, my $5,000, and turn it into $10,000 in a week, in a month, or even in a year? Where are you going to go and take that money and do that? And if you can answer that question, then you're in the pound seats. But most of you can't. But you come to trading and you expect that to happen. Now, you could be lucky and it could happen. But then you could be unlucky and it could go to zero. And that's what I said to you right in the beginning. It is really dependent. Your fear is really dependent on whether that's your last $5,000 or whether it's just a portion of your 5 million that you've got lying in the bank. That makes a difference on how you're going to trade it. And if it's your last $5,000, I can almost guarantee you that you're going to lose it, because it's very, very, very difficult to hold on to it when it's your last, because you'll make some serious, nasty, horrible mistakes. Oh yes, and Henny says, remember to hit the like button. Don't forget to do that, guys. Do hit the like button, please. That would be fantastic. Lubango. Rob, do you think a trader should take his personality into account when deciding how to trade? Example, I hate losing, so maybe trade more 1-to-1 instead of 1-to-3 for higher win rates. Blue Mango, not counting losing as part of doing business is a red flag for traders. Okay, so both of you are right here, by the way, Nick and Blue Mango. You have to, yes, you have to, all of you have to understand that you're going to lose in trading. And as I just told you in that whole story that I went over now, I lose more than 50% of my trades on a normal basis, okay? So that doesn't mean you don't have to look at my trade of the day. It just means you have to manage your trades, right? When I say more than 50%, I don't mean I'm like losing 80% or anything like that. I just generally, it's 50-50, okay? And sometimes I'll lose 6 rather than lose 4. Yeah, it's kind of just how it goes. But the wins are big. Now, your personality counts a lot, because you have to find your balance. You have to find where you're comfortable. Now, the problem here is, in the beginning, you will always be uncomfortable. You lose $1, you're going to be uncomfortable because you're not used to this. You're not used to throwing money away. So finding that balance of where am I comfortable and what amounts am I comfortable with is a very difficult thing to do. And where the psychology comes in is, as I said to you earlier, if it's your last $5,000 on earth, that fear factor is going to be insane. It's going to be so painful. But if that $5,000 that you're trading is only part of $1 million, it's not going to be as painful. It's going to be painful, but not as painful. You're just going to be like, okay, I've still got $995,995, whatever. So you kind of like get over it. You get over it a little bit easier. But the other thing is, once you understand that you're losing, or that you will lose half your trades, and once you understand that there's a strategy, then the amount that you trade doesn't matter. Because as long as you've set up a system on your strategy where you can lose 10 trades in a row and still be in the game, knowing that you're going to make a gargantuan profit on a couple of trades, and you're going to negate all those small losses, then it doesn't matter on the sizes. For example, I like to, on my cash account, I like to risk 1,000 per trade. That makes me, it's a round figure and it makes me comfortable, okay, on those accounts. And I don't like to have more than $100,000 in any one cash account because I don't trust brokers as much as you do. So I prefer to split it amongst brokers. So I might, for example, take the Australian dollar, United States dollar trade on 3 or 4 different accounts. So now I'm no longer risking $1,000. I'm risking maybe $3,000 or $4,000 on that one trade, but on different accounts. So you've got to take that into account as well. But once you understand that on any one or any particular given account, you're not going to lose all your trades, and that you're going to take smaller losses than you make wins, then you're going to understand that, well, if I lose a couple of $1,000s on a few trades, but I make tens of thousands of dollars on the winning trades, then of course I'm making money. And that the reason I play with this account for you guys that we trade on the live show here, this account, which I probably only look at a couple of times a week because we do it for the show. I use it for the videos and things like that. This one and the other, the C-Trader one, and they're very handy for this sort of thing. Now, this is a $25,000 account which is funded or whatever the case, and I just try and keep the account alive, so I trade it the way I would trade a bigger account, and I risk $250 per trade, and I keep the account going. So it's much of a muchness. It's just a good way to show you guys how to trade. But now, the other reason for that is if I bring in the bigger accounts as well, and I start showing you $100,000 accounts and we start trading with thousands of dollars, it might scare a lot of people to see that kind of money being traded. But it doesn't make any difference. This is the point I'm trying to get across. There are thresholds and you've got to find your balance, but you've also got to get that aha moment when you realize that the figure doesn't matter. What matters is that you risk 1% of the account, you keep your losses much less than your wins, and then you make more on the wins. Then you can start trading with $10,000 risks, and it doesn't actually worry you because you know you're going to make $30,000 for a $10,000 loss. And you start working towards that sort of threshold. So your threshold grows over time. I don't recommend that anyone gets into trading in their first year and says, oh, I'm just going to risk $1,000 per trade or $10,000 per trade or these big amounts, because your psychology won't be able to accept it, and your psychology won't be able to deal with it. It doesn't matter how much money you've got in the bank, you still won't be able to accept it or deal with it. And there's also a question on Blue Mango as to how much is a lot, okay? Because for different people, a lot of money is a different amount. For the guy sitting on the street without a house, struggling to get by, to him, you give him $10, it's like a huge sum of money. But to you, $10 is nothing. It's a burger, whatever the case. So that's where I'm trying to bring the example across, is for different people, a different amount of money means a different thing. Warren Buffett won't see $1,000 as a lot of money. He won't see $10,000 as a lot of money because he's got so much money. Bill Gates will not see that kind of money as a lot of money. For him, it's just, it's a small amount. But for you, $10,000 might be a lot. It just depends on the person as well, and what their wealth status is, and how much they're prepared to invest. You've got to look at it. It's just numbers. It's just numbers, and everyone's got their threshold. You've got to find that balance, and you've got to look within and see for yourself what you are comfortable with and where your comfort zone is. I'm ranting on about that now, but you know that it's quite a long story. Yeah? But yes, Blue Mango, there is nothing wrong, and to get back to that, there's nothing wrong with trading on a one-to-one. I know I went off on a tangent there, but you're actually asking, should I maybe trade on a one-to-one? There's nothing wrong with trading a one-to-one trade. I've done it a million times, and the way you can do that is a good example of that. Let's say you traded this on a one-to-one rather than on a good risk to reward. What you can do is on that one-to-one, and let me just find something a little bit more where I can show you better. What you can do on that one-to-one, let's say your profit was down here, and you're getting close to your profit, getting close to your profit, getting closer to your profit. What you can do is you can take that stop loss, right, move it up behind that one-to-one, and just move the profit away. Okay, because even if the profit here was to get up to here, I would move that profit away and move my stop loss up to here. Now it's no longer a one-to-one, because now you're pushing it above the one-to-one and it's pushing away. But if it comes back, it takes it out, you get the one-to-one that you wanted. There's nothing wrong with that. The trouble with a one-to-one trade is if you take the profit at one-to-one on every single trade, then if you lose 6 out of 10 trades, then you're going to be in a losing position because it's 50-50. And now you're 60-40 down. So to take one-to-one trades, you've got to win 6 of your 10 trades. That's not easy. That's not easy. So it is, particularly when you're looking for those kind of profits. So what you're going to have to do is, like I say, I've taken many a one-to-one trade, and I don't mind doing it. But what I will normally do, it won't be the majority of my trades. The majority of my trades would always be more than one-to-one, 2-to-1, 3-to-1. But the minority of my trades, there will be a one-to-one, and when it gets there, I will try and push my stop loss behind it and try and push the profit out and see if I can make more than one-to-one. But on many occasions, I take a trade, and like, for example, this trade, let's say this comes back and gives me $100. That's nowhere close to the profit that I wanted. Do I see it as a loss? No, it's a profit, but it's much less than even one-to-one. It's actually, you're making $100 for risking $250. You're making half of what you're supposed to make. But it's okay, because you planned to make more, and if it comes back and takes that out, you haven't made a loss and the trade hasn't cost you anything. So keep that in mind as well. You're going to have a whole bunch of these trades in amongst it as well, which is why I look at my win rate as a little bit less than 50, because many of my trades get taken out at smaller amounts because of these trailing stops. And I count that as kind of a loss. I count that as not part of my big wins. So my bigger wins make up a smaller percentage of my trades, but I don't mind because they're big. And when they hit their celebratory times, I mean, if you hit a big win, it's really nice. It makes you feel good, and it gives you confidence. And then you'll trade a lot of trades before you get there again. You get that big one again. FX Trader says, if you worry about your position, you are risking too much money. Most people take the loss personally, and that's a mistake. Interesting what FX Trader says here, where most people take the loss personally, and that's a mistake. And that, you know what most people do as well, is they think somebody's watching them. They think somebody's watching them trade. And the only person who's got someone watching them right now here is me, because I've got a video going and a live video and you're watching these trades. But if I'm sitting here alone with no video going and no live show, believe me, no one cares what I'm doing. In fact, they're hoping that I'm losing because they want to win, right? So no one's watching you. No one cares. Don't take it personally. No one's coming after you. No one's searching out your stop loss. No one. It's just, yeah. If you worry about your position, you've traded too much. You're quite right. If you can't go to sleep at night, if you're constantly looking at your mobile phone while you're out to see how your trade's doing, if you are constantly stressing about the trade, you've overtraded. You've put too much money into it. I know this because I've done this. I mean, as I said to you, I talked to you about my mistakes, and it's one of the mistakes that I've made many times in the past where I overtraded. But then I came to the realization that I'll probably make more on the wins. And then as long as I keep the percentage on my account right, there's a good chance that I'm going to make money. So I'm not too concerned about it anymore. But yes, if you overtrade on something, if you put too much in, there's a good chance that you're going to stress about it. You know, where people sometimes get into bigger trades. One of the biggest problems that traders have, a massive problem, is dollar cost averaging. Dollar cost averaging on the negative side. In other words, you go into a loss and you think, oh, I don't want to be in a loss, but I want to get out of this and I want to get it back. So you dollar cost average it so that it only has to go halfway to get back. So you can get back to zero and you can go, phew, I got out of that. That's one of the biggest mistakes that traders make as well, is because they dollar cost average. And unfortunately, it gets worse. It gets even worse. So then the trader dollar cost averages again, and it doesn't work out and it gets worse. Now, you've taken your $1,000 loss, you've turned it into a $10,000 loss, and now suddenly you're starting to feel some horrific pain, and it's still in a loss, and you're still not getting out of the trade. And that's where people start to really sweat. Because now you know, if you dollar cost average it again, you're suddenly going 20,000 in rather than 10,000. And if you dollar cost average again, you're going 40,000. Suddenly you're heading towards losing half your capital if you had a $100,000 account. And that starts to wipe you out, which is why I always tell traders, set your stop loss. If it's $1,000, there it is. Take the loss, walk away, get a new trade. You've got plenty more chances to get that back. That one trade can take you down 10 trades in a matter of moments. And then it can take you down 20 trades in a matter of moments further, and even 40 trades. Just by doubling up, doubling up, and doubling up. So do not dollar cost average. Do not move your stop loss away. I've seen it so many times. I've made the mistakes myself in the past, you know, before I believed in stop loss. There was a time, yeah, in the very beginning, when I thought, what, stop loss? Are you crazy? Why would I lose money? I didn't think you could lose money. Insane, isn't it? Dollar cost averaging destroyed Jesse Livermore. Dollar cost averaging will destroy anyone. It's insanely dangerous. Money management, Nick says, yeah, very active money management was important profitability for him. Yeah, I totally agree. Money management is, and managing your trade, having a strategy, staying in the game, protect the capital at all costs. Protect the capital. Do not risk the capital, because that's where you go wrong. You know, if you just dollar cost average a few times, I mean, you say FX Trader here says it destroyed Jesse Livermore. You know, I look at it and say it doesn't take much to do that. It doesn't take much to destroy yourself doing something like that. And it's normally because you really believe in the trade you've taken in the first place. You can't believe it's going against you. How can it be going against me? That's impossible. There's no chance this could have gone against me. I had all the cards on the table, and my fortune teller told me that this was going to go that way. And then it just gets worse and it gets worse. And you can't believe that it's possible. You know, where a lot of people get destroyed with that is when there's a crash. Ooh. When they don't believe that it's possible that this is happening. Most people, you know, you'll see yourself, if you haven't been through a crash, because I've been through a couple, and there's a funny thing in your psyche, which I realized immediately, and I was very fortunate through those crashes that I followed the rules. And the big rules are, you know, take your stop loss, manage the risk, follow the strategy. And the one thing that came to mind was this normally happens, I don't know, it starts happening on the Friday afternoon. I don't know why it always starts happening on the Friday afternoon. There's some rumors coming up to it, but on the Friday afternoon it starts happening. And these things start going down. And for some reason or another, your brain tells you that it'll be okay next week. It'll all come back. It'll all be all right. I don't know why it does that. I don't know why. It did work out this time with the war thing and Russia and all that and whatnot, and, you know, America and stuff recently. It kind of worked out. But normally it doesn't. And I don't know why, but your psychology on that Friday afternoon when you see the stocks dropping, it doesn't accept it. It kind of says, no, it'll be okay in a minute. It'll come back. It'll come back. It'll come back. And it doesn't. It's a funny thing. It's a really funny thing. I was extremely fortunate in the few times that it's happened that I let my stop losses get taken out, or I even took them out earlier and just let go. And in one or two cases, I made an absolute fortune turning short, and that worked out for me. But I had a good few close friends that we used to be on WhatsApp group together and stuff like that, and they lost everything, man. They lost a lot. So bad. So bad. Those crashes, you got to watch. If it happens, just walk away. You know, even if on Monday morning you do come back and everything's fine, just accept it. Just, okay, you know, that's fine. At least you didn't lose anything. I did. You know, the martingale effect is very much dollar cost averaging. I did try it. Believe me, I've tried it all. In the past, I did make the mistake of doing that, and that's why I know about it. And like I said to you guys, I try and show you the mistakes that I've made so that you don't make them, because I've been doing this a long time. 33 years is a long time. And in that time, you make those mistakes because you get sucked into all these little things and you do these stupid things. And I thought that I invented the dollar cost averaging when I did it. You know, I thought, oh, so clever. Oh, I've worked this out mathematically now. I'm going to get my money back. That was many years ago. And then it didn't have a name. I know, yeah, it didn't have a name, but believe me, I did it. I made the mistake. I got out of many trades where I went, phew, I got out of that. That's why I know about that relief trade phenomenon, that feeling, the relief trade. I know all about it. I've done it. I made that mistake, and yeah, it's a sure way to lose. It's a sure way to lose because there's always that one trade. There's always that one that doesn't come back. There's always that one that just keeps going, and when it does, it just doubles up more and more and more and more, and it just gets heavier and heavier and heavier, and it becomes impossible to come back from it. There's just no way you can come back from it. It's crazy. So yeah, Coral, believe me, I did try it. And Big Martingale's more, that will never work, okay? Because effectively, the dollar cost averaging principle on that is, let's say you normally risk $1,000 on a trade on a 4-hour chart with a much larger amount. So let's say you on this trade, $250 because this is $250. Let's keep it simple, right? So you've got your $250 risk down here, and you've got your $658 profit up there, and it's a long way up there. Whereas when you put this on the 5-minute chart, you're trading on much smaller levels. Okay, so what people do is instead of trading the $250, they trade $25. They trade 10% of that. The failure behind this is, for example, this trade, which is unusual, it went slightly into loss and then immediately into profit. So if this had been a $25 trade on a smaller account, whatever the case, then effectively I would have been trading on a $25 and I would have been looking for a profit of $100 or something. And there's no point to that. Whereas what you're expecting with the DCA of like the martingale effect or whatever is that it's gonna go down and then you're gonna put some more in, it's gonna go down, you're gonna put some more in, you're gonna build the trade up to that size. But for it to build up to that size, it's got to go into loss. So you might as well wait for it to get to that point and then just trade from there and buy it up, don't you think? So no, that doesn't work. It just doesn't work, because when it does win immediately, you're only winning a smaller portion of your trade, which also doesn't help. No, that doesn't work either. And okay, yes, I'm sorry. Yeah, Nick's right. Dollar cost averaging works for long-term investing on regularly balanced. Okay, let me not be a hypocrite here. I do dollar cost average on my investments, not because they're losing, but because they're winning, or because they're correcting. So when I call it dollar cost averaging, I actually don't buy new shares every month. I'll look at what I've got to put into my investments and add to my investments, and I've got existing stock in Amazon, Nvidia, Coca-Cola, you name them there. Okay, so then I'll go and look at it, and it doesn't really matter where the price is. I'm going to add to that trade with the money that I've got, and I'll say, well, that's a good one to add to because it's pulled back a little bit. I'm not dollar cost averaging it because it's in a loss or because I'm trying to recover it or get it back to zero. What I'm doing is I'm adding to my investment. So I don't know if you can really call it dollar cost averaging. It's more like I'm just adding to a long-term investment and putting more money into it. And then obviously it dollar cost averages it. So that's one area where I do something to that effect. So yes, Nick, you're right. It works for long-term investing, but I don't know if you can really call it dollar cost averaging. I don't know, but yeah, yeah. The book called "Can't Lose Trading Commodities, Use Scale Trading." You know, the trouble with commodities is commodities are cyclical. For example, if I buy Coca-Cola and I keep adding to it and it grows and it'll grow and it'll grow and it'll grow and it'll grow and it'll just keep on growing forever. In say a year's time, it will have still grown, probably still be around. It's Coke after all, and that's how investing works. Whereas commodities, while they do sort of build over time, they tend to have this: I'll go up and then I'll go all the way down again, and then I'll go up and then I'll go all the way down again, and then I'll go up, and they don't have this linear way of going up. They have this sort of almost flat way of going along. And the only way a commodity goes up is with inflation. So if inflation goes up, then gold goes with it and whatnot, because obviously it's got to cost you more money. A good example is just look at Brent crude oil. How long has Brent crude oil been trading between $60 and $120? How long has it been trading there? It's not going to make you a long-term profit. If I'd invested in Brent crude oil 10 years ago, I wouldn't be much better off than I was 10 years ago. And in fact, my money would be worth less because of inflation. So it would have been an absolutely useless trade. Gold, not much better. It has grown a bit. It might have sort of doubled the money a bit, but not much better. Whereas if you look at shares and you look at indexes and things like that, then there's money to be made. Don't even talk about Forex. No point in investing in Forex. You're not going to make money there. But you see, Forex and commodities are good for trading. Great for trading because you can buy them at the bottom, sell them at the top, and You know, there's always that sort of ranging effect. And that's why they're so good for that. But shares, on the other hand, and indexes go linear straight up, and it's a good investment. You buy it low and you grow it till it's high. And I believe nowadays that crypto is pretty much the same. I don't want to call on crypto because I don't know the market as well as you guys do. Crypto has never been my favorite. I've always believed it's built on fresh air. And I've never had a strong belief in investing in crypto. Pity, because maybe I could have made a fortune from crypto. But I didn't. I kept investing in what I believe in, which is shares and companies, because they have asset value. They have an intrinsic value, which I look at. And they have real people running them, and they're real companies. So that I feel comfortable with that. But investing in crypto feels like I'm just putting my money into some kind of Ponzi scheme, which doesn't exist, and there's no basis to it apart from trading. I will trade crypto. I trade crypto because it's a tradable product. So I look at it slightly differently. So I'm not as clued up on crypto as I should be, but it's a tradable product and it has a chart and it's worth looking at. But there as well, it looks to me like it has been quite a reasonably good growth product, and it has grown extremely well. It might be too soon to call because we don't know what could happen next, but at the moment it looks pretty strong. Yeah, scale trade long ago with soybeans. Yeah, it's terrible for holding long term. It's yeah, the long term on commodities is it's a no. It's good for trading, really good for trading because of its cyclical ability, and that goes with Forex as well. I mean, it's great for trading because of its cyclical, moves. Whereas indexes and crypto are better for investing because they go long, they go a long way, and they go on a straight up basis. I mean, you would have made a fortune if you'd invested in the S&P 500 99 years ago. You'd be well off, but on gold, you'd be looking at it going, "Where's my money?" So yeah, interesting stuff. Interesting stuff. I hope you guys are finding it interesting anyway. So I'm really rolling on today, aren't I? Yeah, the unsolved mysteries of time. It's crazy. Look, you don't need to trade every day unless you're a 5-minute trader. And that's the nice thing about trading. You can take trading anywhere with you. But one of the main reasons I got into trading in the first place is because I didn't want to be stuck in one place forever. And I didn't want to have to go to a business or a shop forever or whatever the case. I wanted to be able to pick up my business and move it around with me and whatever. And that's the nice thing about trading is you can do that. You can take your business with you and be anywhere you like. I mean, the downside to it, though, is I found myself on holiday, many an occasion, got to have the laptop with or the mobile phone or whatever. And I find myself trading while I'm on holiday. And yeah, you got people with you. They kind of get peeved with you. Come on, let's go, sort of thing. Oh, I'm just got to do this. Yeah, you do find yourself doing that, of course. But you can carry it around with you. You can carry your work around with you, which is great. Um, but like I say, guys, if you really want to make a profit in the long run, investing is the way to go. Investing will take you along the right road. It'll take you in the direction that you need to go in, and it will give you the profit at the end of the day, because that's where it is. When it comes to trading, just understand everyone loses. It's not just you. Everyone loses. And if you don't understand that everyone loses, then either you're watching the wrong YouTube videos or you just haven't experienced it yet. But it's important to understand that everyone loses, not just you. It's insane how many people believe that you're just going to win and win and win and win. You know, and that's another thing that's really important to understand, is that win rates cannot make you money. The amount of people out there that will tell you that a win rate's going to make you money. A win rate cannot make you money. You see, a win rate comes with taking the profits too early. You see, if you're quick to take the profits, if you're quick to jump out, for example, if I take this trade, or even this trade, there's a Brent crude oil, which is not making much. I take this trade and I just close it out here because it's showing a bit of red and say, I'm out of this trade now, gone. Take my $64 and run. And I do that 7 times, then I'm going to show you a win rate of 7 out of 10. You're going to be like, sure, Rob, you're winning every trade, man. And it's easy to do that because the trade goes into a profit because I saw that happen, and it goes into a profit, and I make my $64 and I walk away. When I should be looking for my $700, okay? Because that's a real win. But I'm not going to get that every time. We all know that. We all know we're not going to get that every time. We're going to try, but we're not going to get that every time. So there'll be 7 wins in a row with 50 or 60 or 70 or $100, and you'll be like, oh, I'm so excited. And then the 8th trade's going to come along, and this is going to go red, and it's going to go all the way down. And most of the people that do that kind of trading will move the stop loss away or have no stop loss whatsoever. And that 8th or 9th trade will take like a couple of $1,000 off them or something. And even the 7 trades that they won won't cover the losses that they're taking on the 8th trade, which is why I say to you, a win rate doesn't make you money. If you don't have a proper strategy and a proper risk management in place, how can a win rate make you money? A win rate can't make you money. It can just give you a win rate. For you to be successful, scalping small wins like that, for you to be genuinely successful, scalping those small wins, you've literally got to win 100% of your trades. And I still haven't met the person who wins 100% of their trades. Not one, nowhere, nowhere. Not at all. Still haven't met them. I'm waiting to meet that person who wins 100% of their trades. There are people that trade well and win large percentages and do have good win rates. It's nice, but in general, that one big loss could hurt them. But the guys that do well are the guys that do keep stop loss, that do control their trading, and if they do have a win rate and they have the stop loss in place, then they can perhaps manage it in such a way that they'll make more. But in most cases, the problem is you can't be winning $60, $70 on every trade and then losing $200 or $300 on one trade. Because it's when you start balancing the books at the end of the day, you're going to be looking at it and thinking, this is not working out. So you got to be careful of that. Yeah. Quite an interesting lot of stories I'm telling you today. But like I've told you guys before, and I know you're going to say, oh, but you got to do that. No, my goal is not to make you guys rich or to tell you that you're going to get rich. My goal is to try and keep you in the game and make you competent. If you're a competent trader, then you can figure it out for yourself. And the important thing as well, and here's another rant, okay? You need to figure it out. You can't follow my trades exactly and be profitable because you're not going to achieve the same result because you've got a different mindset to me. And this is something that's difficult to explain, but if I try and do what another trader is doing exactly, I'm going to struggle to get the exact same result. What I can do is mirror what they're doing. I can sort of, for example, say, I'll trade that way with that process and that strategy and that, and build that around myself and tweak it around myself and make it work for me. And then that's fine because it's working for that person. But you can't do the exact same as that person. You're never going to achieve the exact same result. You've got to figure these things out, how it works for you, how the system works for you, how the strategy works for you. So the system, you don't have to use price action to use the strategy. So if you don't want to use that part, then you don't have to. You can tweak it and say, but I prefer using Fibonacci, so you use that. That's fine. but then put the strategy in place and then just tweak the strategy to suit yourself. Apart from the fact that you must keep the account size the same, apart from the fact that you must take the same risk on every single trade, but you can adjust the risk according to your needs. It's all about your fear, your psychology, your patience, your FOMO, fear of missing out. How do you adjust? How do you get around that? How do you work with that? And also on the system itself. For example, if you do choose to trade with a price action, and you know that I will say we trade three ways: we trade with a trend, we trade in a range, and we counter trade. For some people, might be stronger at counter trading than trend trading. Others might be stronger at trend trading than counter trading. So you're going to adjust that to the way you feel and it suits you. So for example, if I'm really enjoy counter trading more than I enjoy trend trading, then I'm going to get more counter trades, and then you're going to be looking at my trades and thinking, but I prefer trend trading. So just keep that in mind. Everyone needs to adjust the system and also the strategy to suit their lifestyle, to suit their balance, to suit their needs, and the amount of money that you might be trading with, the type of account you might be trading with. If you have a funded account, for example, and for those of you who need a funded account, there are some links in the description as well. It helps you to get sort of in between your cash account and your, the learning to trade and that sort of thing. And if you make a profit off of a funded account, it's great. You make some money for nothing. It also helps people that don't have large cash amounts to get into the market, because how much capital do you need to trade with? You need capital to trade with. You can't trade with no capital. That doesn't work either. So that helps people that don't have capital to get into trading as well. But back to the point, if you're trading on a funded account, there are limitations to drawdown. There are limitations to the amount of money you can lose on any given day and on the overall account. And you have to take that into account with your strategy and your balance. Whereas, and what it is good for is it does teach you to do that. But whereas on your cash account, that limitation is less. That limitation is not there because you can risk the whole account if you want to. So you get a different risk factor that you can play with. So you've got to look at those aspects as well when you're looking at your trading. So, for example, if you see a trader, for example, on YouTube, not just me, maybe one of the other guys, and they're doing a certain thing, and you see them doing very well with it, it's not necessarily that you're going to do exactly the same or that you're going to copy it exactly the same way, because that particular person has a particular type of mindset, and you have to be in that mindset to take those trades and make that profit. For example, there are traders out there that can trade on a 1-minute chart, a 1-second chart, and do really well with it. And they choose 3 products, and that's it for the rest of their lives. They only trade with those 2 or 3 products. You come along and you think, well, I can do that. And you start getting involved in that. And then you find out that you can't. And the whole reason that you can't is not because they're doing it wrong or because they're telling you a fib. They're doing it. They're trading it. But it's their mindset that's trading it. And they've been doing it for a long time, so they understand how they're doing it. You come along and you try to do it, and your mindset doesn't fit into that little box and that little slot. And you've got a different way of handling your fear, your patience, whatever the case, and you start losing. Don't blame that oak. It's not his fault or her fault. It's you. It's all inside you. You have to get around it. You have to figure it out. You'll go around. I think, Minnie, you asked me earlier, can you make a profit trading? Does it work? And all the rest of it. The thing is, everybody's got their way of trading, and they're all out there trading. You can go and ask that question of absolutely anyone, and the results are going to be different, and they're all going to be trading in different ways, and you have to figure that out. I'm just rambling now, but yeah, no, it's important for you to understand that you can't just sort of copy someone else and expect it to work perfectly. You've got to work out a balance for yourself and work out what works best for you and get around it. Like I've said before, charts can't predict the market. You can't predict the market, and everyone loses, not just you. You know, a lot of people make it look like they're winning all the time. It's easy to do that. So you see them trading out there, and you think, "Oh, they're winning, they're winning, they're winning. They're making so much money, they're winning." And I don't know how they do it, but they make it look like they're always winning. And maybe they just never show you the losing days or the losses or whatever the case, but they make it look like they're winning all the time. And you get excited by that, and you get involved in that, and you get hooked into that, and you start following that system 100%. And then, you find out you're taking some losses. Then you question the fact, why? Why am I taking losses? Does this actually work? It does, but you just have to get around. Every single system in the market works. Do you know why? Because the market's 50-50. It's not the system that makes you money. It's not the charts that make you money. It's your strategy that makes you money. Just apply the strategy to any system, and then you'll make the money. And manage the trades correctly. That's so important. Manage the trades correctly. The thing is, the reason I have an investment account always, or investment accounts, is because many years ago, someone told me, Rob, it's not timing the market, it's time in the market. And I never understood that. I mean, I never believed that. And it's true. The bulk of income comes from the time in the market, from the investments. This trading is fun. Trading will make you some money, and like I said to you, you'll have a couple of wins during the year, and you'll have a couple of big wins and a couple of mediocre wins, and you'll come out on top with all your small losses. And at the end of the year, you'll look at it and say, oh, I made a profit. That's great. Can you live on that profit? How much money have you put in there, and all the rest of it? But at the end of the day, those investments will always make you money. It's time in the market. If you've got time in the market, you'll make money. Hi, everyone. Sorry I'm late. I was in another meeting. Hello, Shane. I hope the meeting was worthwhile and they bought you beers and stuff. I keep reading that the business model of so-called prop firms is based on traders losing the challenge and paying more fees. I agree with you, FX Trader. I agree with you. Let me tell you something about funded accounts that got to me. I did not believe in prop firms or funded accounts at all. I wouldn't touch them at all until this year. And it was an aha moment that came to me again, because I was so negative towards them that I wouldn't even look at them. I just, exactly what you said there, my opinion was that at the end of the day, they're just making you fail and making you pay more fees so that they can make more money. Probably true. Who knows? But I was so dead against them that that's what I believed in. But then this year I realized that there was a lot of people out there that don't have the capital to get into trading, that were getting into trading with a few $100, few $1,000, whatever the case, and trying to make a living. I was like, there's just absolutely no way you can do that. And the other problem that I saw was people going on courses or learning to trade and then jumping straight from the demo after 2 weeks into a large cash account, which is maybe their last money on earth, a pension, whatever the case, and throwing that cash in a leveraged account. Which is not to say the way I started as well. I mean, I started with my own money and risked it and all the rest of it. There's nothing wrong with that. Nothing wrong with that at all. But I saw the danger of it. I saw the issue here that so many people lose and so many people end up in deep, deep trouble. So then the light bulb came on that, hang on, how much does a prop firm account cost? And how much does a funded account cost? Not a lot. Not a lot. They're prepared to share a profit with you if they do. And at the end of the day, you're also taking some risk because you're putting some money into it, a small amount of money, but some money into it. And if you're planning to make some money back from it and profit back from it and trying to get your cut, then there's that risk involved. So it teaches you risk. It also teaches you how to manage your risk, and it also teaches you how to control the money. So the way I looked at it is, well, hang on a minute. This is actually not a bad thing. If you have a little funded account in between your learning phase and your cash, then you can spend some time on a funded account, learning responsibility, learning the risk. And if you're good at it and you make some money out of it, that's great. But you can learn to trade properly with the psychology and the fear involved, because it's some real money that you might be losing. And you can get the picture of how you're supposed to trade. So you can put it in between yourself and the money, right? Once you realize that you know how to trade properly and then you've figured it out, then you can say, well, I don't need the funded accounts anymore. I'll just go and trade with my own money. That's if you've got your own money. If you don't, then you're going to carry on trading with the funded accounts and take a profit from there. So, yeah, that's the way I see them now. So I've opened up to them. I've warmed up to them, let's say, in that sense, and thought it's actually a good intermediary. And it's also good for those people who don't have money to trade with. They can get a funded account, and if they're successful with it, they can get their cut, in some cases 80, 90%. So, depending on which account you take, it's worth it in that sense. I don't trust them. I don't trust any of them. I still, I go back to where I was last year, where I was dead set against them. It's just that I realized that there's a good purpose behind them. So rather than them using you, you can now kind of use them as a stepping stone to your success. And then you don't have to risk your hard-earned money immediately. Look, you can do the following. If you have a large amount of cash, you can open a small cash account alongside it, and you can play around with that as well. And that can also teach you along the way, and it'll get your account open and that sort of thing. But that's just the way I see funded accounts at the moment. I've opened up to them. I might still change my mind in the future and say they're a load of old rubbish or something to that effect. Who knows? But as it stands at the moment, I'm kind of in that band of, okay, let's give them a chance and let them show us that they can be upstanding citizens and pay us our money and what have you. But they are a good thing, particularly, you see, it came to me with this, me showing you guys how to trade. It came to me with showing people how to trade, and it sort of dawned on me that, hang on a minute, there is a need for something like this, and it's useful. Look, I was the unfortunate, we never had that sort of thing. We didn't even have leverage trading when I started trading. You just had to take the money out and trade. And they used to tell me, Rob, don't borrow money to trade, whatever you do. Oh, yeah, of course I did. Take the credit card. Get going, man. Yeah. Yes, Nick, you can. In fact, I'm not sure. I've got, I think, a couple of links in my description. I think FX2. I've got one of my accounts was a complete instant funding. Straight up, you can just buy an instant funded account. There are some, just watch out for the drawdown rules and things like that. They are slightly different. Yes, you can skip the evaluation process, straight to direct funding. So they are slightly more expensive. I've got $100,000 instant funded account that is grown to, I think, 105,000 now. Take the profit out. They don't trust the oaks for the profit. Okay. DAX is looking like wants to go back up now, which means the S&P probably wants to do that as well. Does look like it wants to try and go up. Yeah, you never know. We shall see what happens there. See if it goes up or goes down. Trouble is, if they go up, what's going to happen to this trade? That one looks happy. Looks like it wants to go up. It's fine. Dum, 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 dum. Jane, you can make a suggestion with funded accounts. Of course you can. I'm not married to funded accounts. I promise you. I'm actually using them this year to show you guys how to trade because, you know, it's nice and useful and easy. So, yeah, you can make a suggestion with funded accounts by all means. I actually had a bit of fun with them to see how they operate, to see how they go, because I never had funded accounts until this year. And I wanted to see how they operate and how it goes. I was interested. You know, who am I to comment on them and say that they're a load of old rubbish if I haven't used them? And I thought, well, I'll use them and see how they go. And I haven't been disappointed in any way, shape, or form yet. I've had quite positive experience. So I can't complain up till now. I heard one person tell me they did have a problem. But yeah, like I say, I haven't had a bad experience till now. Yeah, that NVIDIA investment. I tell you, Nick, I love my NVIDIA investment. I cannot believe that I picked a company like NVIDIA and it's done so well. That's the last, and that's usually is, but it was the last one on earth that I expected to do so well. It's crazy. Absolutely crazy. That's great. Wonderful. Who am I to complain? Can't complain at all. Yeah. Here I was expecting a whole bunch of other shares to do the 10-bagger thing. NVIDIA does it. That's really great. You may have already said this, but make your drawdown amount your actual account size. Example, on a $5,000 funded account with a drawdown limit of 6% is $300. Okay. Make your drawdown amount your actual account size. Wow. You know, Shane, oh, I get that. But that's going to be, you see, I'm already, for example, this account is a $25,000 account, and we risk 1%, which is $250. The overall drawdown on this account, I think, is a couple of $1,000. Okay, so yeah, I'm okay with that. I take a few trades and it does okay. I think if you take it down to, if I take this down to say it's a $2,500 account, then no. I prefer to work on the total and just work on the 1% rule, and then rather than taking 10 trades, take 5 trades. I have a maximum trade rule on the funded accounts of 5 trades, and that's it. So if I lose 5 trades, because you see the trouble is you've got a daily drawdown, which is much less. I think it's about $1,000 on this account. Daily drawdown. So if I lose 4 trades, I'm in trouble. So I normally take about 4 or 5 trades max on these accounts. That's all. And that's fine. Look, yeah, it is for margin. But look, Shane, if you want to trade it that way, you'll stay in the game forever. There's nothing wrong with that. I would say, I don't know I think $300 is probably on a $5,000 account. probably the total limit, because this $25,000 account, I think, is $2,000 on the overall, and $1,000 per day or something like that. Yeah. I don't know. I'll have to think about it. I know what you're saying. I know you're saying treat the drawdown as your account size, but no, I prefer to use the margin. Take the risk on the 1% of the account. If it doesn't work out, it doesn't work out. You lose a few trades, you lose the account. The accounts are not that expensive, and at least you stand a chance of building the account up. You're never going to build the account up that way if you drop it down that far. You're just never going to build the account up. Buy your $5,000 account. 1% is $50. Trade $50 per trade. You can lose 4 trades most likely. Yeah, more than that actually. So yeah, no, don't worry about it. Have a daily limit of 3% with a total drawdown of 5-6%. A daily limit of 3% is usually an instant account, cash account. You've normally got 4% on these evaluation accounts, and the total drawdown of 6% is usually, I think my big account's got like a 7%, something like that. And then the 100,000, that would be $7,000 or something. Shane, 6 trades, yeah. 6 trades you got. You got to win. You got to do some wins. But okay, I mean, if you want to do that, you can, but you're going to struggle to ever make any money with it. You know, I think 1% or even 0.5%. I mean, you can do that as well. Here's another way to look at it, Shane, is instead of trading 1% per trade, trade 0.5% per trade, because then you can do 12 trades. What am I saying? Yeah. So do it that way. Just rather risk 0.5%, then at least you still stand a chance. So for example, on this account, instead of $250, it would be $125 per trade. And then just keep the risk the same on every single trade and work your account that way. I mean, the likelihood of you losing 10 or 12 trades in a row shouldn't happen. It really shouldn't happen, especially with a market that's 50-50. You should make a couple of good trades in between that will keep you in the game. Just a thought, you know. If you want to do that, if you want to stay in the game longer, just go 0.5%. But I think to take it down to the margin level as the size of your account, I think that's pushing it a bit too far. Because you're literally trading 0.01% or 0.1% or something, which is just, it's going to be too small. It's just going to be too small overall. No problem, Shane. Everyone's here for discussion, and I agree that everyone has their input, and some people might go for that idea. Yeah, no, totally. Don't need to upset the apple cart. We're not upsetting any apple cart. There are people that will enjoy that. Actually, yeah, you're right, Shane. I'm surprised that's coming from you because you like to take some risk. But yeah, no, yeah. It's interesting. But yeah, everyone got their 10 cents worth. Yeah, if you make it work, you'll need to scale up to 20 accounts. Yeah, I get that. You're gonna have to scale it up a bit. Definitely gonna have to scale it up a bit, because even risking 1% on these small accounts, you're not making a lot of money. You know, you're struggling to build it up. You know, it's a different ball game. Totally. I can understand that my philosophy comes from cash accounts, right? Leveraged accounts. So clearly my thought process is not with funded accounts as far as that goes. But I think funded accounts can be run the same way and we can still get through it. We haven't lost a funded account yet, so I got no problem with that. It has worked so far, so it's okay. It stayed in the game. I also have the same dilemma of how treat a prop firm account based on real drawdown. But still, the risk is still small if you lose the account. Yeah, that's what I'm saying, Chris. It's maybe take the risk like you would with a cash account, and if it works, and if you lose, then it's not a big risk. You only lose the money you paid for the account. So yeah, I don't know, because I think it'll just take too long to make any money with the smaller amount. Peachy Trader, that's a cool name. Peachy Trader. Peachy Trader. Okay. I take it the Peachy Trader's a female. I'm just guessing. I don't know. Copy trades across 10 accounts. Here's the Aussie dollar US dollar trade. I've moved the stop loss up to $100 in profit, and on this account it is in profit to the tune of a couple of $100. On my main account, it's making me a couple of $1,000, and it's also got the stop loss up, so I'm pretty happy with that. Look what it did, that big green candle. But that as well, it's a bit of luck, but it's also a bit of skill. Remember I said to you, bouncing out of support. Here we go. We're going to get in at support. It started to take a little bit of a loss, and boom, there she went. I read this in a range, and it was a 50-50. It's bounced there. It's bounced there. It's going to bounce there again. That's what I looked at. And I could have got it wrong. It could have gone down and it would have been a stop loss. But it went the right way, and here we go. It's going the right way. Some of them you win. And if it goes all the way up there, boom, especially on the main account, that'll be nice. Yeah, that'll be one of those medium trades. It'll make me approximately add another 0 to that. Okay. Yeah, it'll do quite well. And yeah, Shane, I actually did do the opposite to what you said, because you were calling it short. Yeah. Did you go long, Shane? Because I remember you saying you actually did go long or something. But yeah, it's doing great on the main account. Very happy with it. I hope it keeps on going. But even if it doesn't, I'll still make that stop loss. It's fine. Doesn't the Aussie dollar do better when gold is going up? Well, gold is going up. Going up, second floor, Lenny's underwear. Yeah, no, that's going up. Look there. It's actually bullish at the moment. There's your gold. That's a lot to do with the dollar, because they're all pegged against the dollar. So the Aussie dollar is pegged against the dollar, and gold is pegged against the mighty dollar. So it's all got a lot to do with the dollar rather than the Aussie itself. But yeah, the Aussie in general is doing well, but it's doing well because of that little dollar thing. But yes, gold is kind of going up anyway, and I'm kind of expecting Brent crude oil to make its way up as well eventually. Because like I said to you guys, commodities are cyclical, and at the moment it's at the bottom of the cycle. So I'm only looking for bullish trades on Brent crude oil because it's at the bottom of the cycle. So I'm buying, and there I go. Even though there's a few nasty red candles going against me there, I'll just sit with that trade for now. That's okay. Going quite well. And then the Nikkei, that one's turning against me. I'm not in it on this one, but on another one. The head and shoulders here, I'm expecting that to play out, but it is in the green as we stand, and I'm expecting it to drop down based on the head and shoulders, even though there is a level here, a nasty looking support level, but it has broken that shoulder, so I'm expecting it should go down still. goes wrong, goes wrong. Huh? You've got to play with the small losses. Actually, Shane, at the beginning of the show, if you go back and have a look, I was actually asking, where's Shane? We need to send someone the ads. I'm so glad you turned up so we can send you the ads, man. Yeah, no, totally. I guess YouTube have got to pay their bills somehow. And at least now they happily send me a share of that. So that's great. I don't mind. Yeah, no. Actually, yeah, no, totally. Definitely send all the ads to Shane. Really, yeah, really, we wanted to send all the ads to you? Or oh, just kidding, Shane. Don't worry. Yeah. So the 1% risk, yeah, we have to consider that. For those of you who want to get more out of your prop firm's accounts, maybe consider 0.5% risk. There's nothing wrong with it. You'll get more trades out of it. If you want to take more time to get there, it's fine. I can't see a problem with that. Like I said, the risk factor, the amount of risk that you take depends on you. And as long as you keep it the same every trade. So it's a very personal thing that you can choose. You can choose how much risk you want to put down or how far you want to go with it and take it from there. You don't have to use the 1%. A lot of people use 2% on their cash accounts. Many people use 2%. I actually know quite a few traders who like to use 2%. It's great. Nothing wrong with it. Yeah, I've shown the Nikkei, eh? Here we go. I called it this morning, I think. Or was it yesterday? I can't remember when I called the Nikkei. Head and shoulders, big head and shoulders, doop, doop, doop. And then you can, the short's already in on the other account. I haven't taken it on here, but here there is a bit of a nasty old, what do you call it, support. And but it has broken to the downside, and I think it'll carry on short. Yeah, that head and shoulders is calling it short. For those of you who don't know what a head and shoulders, how it works, if it breaks below the shoulder, there's the head, there's the shoulder, there's a head, there's the right shoulder. Broken below the shoulder, it's going short. If it breaks above the shoulder over there, the head and shoulders is negated. So I'm trading this based on a head and shoulders rather than the support. I'm trading it based on that head and shoulders. We could have pulled it down here, but then it's off. There's the head and shoulders up there, and it's broken below that. So usually that will tell you that it's going to go down to a certain level. So the Nikkei, yeah, it's short. Totally short. Take profit is up at, down at 39220. Why did I put the take profit so low? I actually don't know, but I'll watch the trade, okay? It's not on this platform, unfortunately, but I'll watch the trade. Probably when it gets down to about 41.2, I'll probably start watching closely. It's closer to the 1-to-1, and I'll put the trailing stop behind it to make sure that it goes okay. I don't know why I chose. Oh yeah, there's a level down here of support, a major support level. That's probably why I put it all the way down here, with a view to letting it run. Because you see what's been happening to me as well is I go out, I leave the trades behind, I come back and it's taken out the profit, and I'm like, ah. So I'm putting the profit further out as well, and then I'll come back and see what's happening, and I'll just put the trailing stop behind it. Yeah, Shane, don't worry. I've been doing that lately because a couple of times I come back and my profit's taken out, and I put the profit too close, in my opinion. It probably wasn't too close. It was probably far enough away, but I kind of look at it and think, why didn't I just put it further out? And then I could have made more, because I could still put the stop loss up behind it. So sometimes I do that. I just put it out really far. And but based on that, the actual take profit would be, if you look at the length of the head, because that's how you take your profit on a head and shoulders. You take the length of the head, you project it down, which would be at about 41.2. So your first profit target should be around 41.2. And then if it breaks through that 41.2 and it keeps on going, then it probably will go all the way down to the bottom level here. I doubt it'll go through the 41.2. It'll probably hit there and say, how's your mother? So let's just see. If it hits that, I mean, already my stop loss would have been brought up pretty close to it, and I'll see how she goes. But this bottom level here, that's probably why I put it down there. I thought, just give it some room and see how she goes. Sometimes you have a feeling about these things as well, like, because even here on the Australian dollar, sometimes I look at it and think I could go away and come back and have that taken out. That wouldn't make me cry because wouldn't be the worst profit. Even on the main account, it'll be a decent profit. But I should actually put it further up so that there's more room for it to move. You still need that trend line on the chart. Which one, the Nikkei or where have I left the trend line? Oh no, that can go. Sorry, dude. Remove that. Sometimes I just don't even see it there. Yeah, there you go. It's out of there. No, you don't need that on the chart. Totally not. No, that's from way back in the, when they were building the pyramids or something like that. I put that trend line in, and then I forgot about it. They had mummies lying around and stuff, and I was drawing trend lines in. I left it there. Got it. Yeah, don't worry. Yeah, took it out. No problem. That's crazy. Why did I do that? Yeah, that's fine. Now, I've got loads of those where I forget. The worst one is like when I put these trend lines in, like on the S&P 500, I've put them in on the day. Those are the worst ones because I'm totally going to forget those ones because they just sort of go into space. And but I needed them there because I wanted to see if the S&P breaks on the day, which it has. But yeah, those ones I tend to forget a lot because you don't see them as clearly. Okay, guys, I'm actually going to head on my way now. It's that time of the day. I've been here for a couple of hours. I want to thank you guys for being here. It's been fun. We've had a great day again, hopefully. And I'll see you guys on Thursday. Construction, building pyramids when I was younger. Yeah, so pulling those big blocks, those big stones behind me, and they were whipping, that one. Yeah, that's us. I'm glad it helps you, Shane. I mean, that's the best way to mark up the charts. There isn't actually a better way to mark up the charts, as far as I can tell. I like the way I mark up the charts. It's actually good. Okay, guys, thanks. Gotta go. Gonna be on my way now. Will I take the afternoon off? No, I'll trade. Carry on doing that. But guys, I hope you make lots of profit, and I hope you come back on Thursday for a little watch, and we get together and we have a little chat. And don't forget all the likes. Yes, we've got lots of likes. That's great. I love it when we get the likes. Makes me feel good. Good. I'll check you guys soon. Keep your feet on the ground. Reach for the sky.